Tata Motors posted a reasonable set of numbers in the last quarter of FY22 despite the severe shortage of semiconductors and commodity inflation. JLR volumes, however, continue to be on a downward trend due to chip shortage. Operating profitability, nevertheless, has improved on a sequential basis. The standalone business also continues to do well, driven by a strong demand scenario. Retail volumes declined merely by 1% on a quarter-on-quarter basis. However, revenues grew by 1% QOQ, driven by rich product mix in the Range Rover family and demand in China market. Despite significant commodity-linked cost inflation, JLR has been able to witness marginal improvement of 60 basis points in its EBITDA margin. This improvement was led by rich product mix, low warranty costs and cost optimization undertaken by the company. Domestic business continues to do well. A significant recovery in demand across CV and PV segments helped the company post strong numbers in Q4 FY22. Sequentially, CV and PV volumes grew 18% and 24% respectively. Volume growth led the company to post a 34% and 24% revenue growth in Q3 and Q4 of FY22 respectively. With new product launches, the company has been able to capture market share from its competitors. Its market share has expanded by 250 basis points and 440 basis points for CV and PV market in FY22 respectively compared to FY21. It's important to note that despite the raw material cost pressure, the EBITDA margin of PV and CV businesses expanded 370 basis points and 330 basis points respectively, driven by operating leverage, cost reduction efforts and a rich product mix. Though JLR is facing production challenges due to chip shortage, demand continues to be very robust. This is evident from the 1.68 lakh retail orders from across geographies. These orders are equivalent to sales of more than 3 months. Furthermore, with the end of the pandemic, key markets of JLR, which is the US and the UK, they're both registering strong growth. China, however, registered a decline due to COVID-led lockdown. New models such as the Defender, new Evoque and the Discovery Sport, all of them have been well received and are expected to boost the company's volumes. JLR has also launched a new Range Rover, the sales of which further helped the order book. It also generated a free cash flow of £340 million in Q4, driven by healthy profitability and prudent working capital management. Now, this indicates the company's ability to manage operations better and to generate cash once chip shortage issue is sorted out. The management highlighted that near-term supply issues owing to the global shortage of semiconductors is easing slowly, but it is expected to be there in 2022 as well. Post-COVID demand has rebounded sharply across segments. However, shortage of semiconductors continues to play spoilsport. Management believes demand momentum is expected to continue on the back of a strong recovery in macroeconomic activities and the opening up of the economy. Further, the government's focus on infrastructure, which is driving demand recovery in cement, steel and minerals, should also boost CV demand. The company expects PV business to maintain momentum on the back of people's preference for personal transport. According to the management, the industry is projected to grow in FY23 and might surpass the FY19 peak as well. In light of the strong demand, management has indicated that the company will continue to step up its investments in products and new business models to deliver customer value while ensuring profitable growth. It has also indicated that despite short-term challenges like chip shortage and cost inflation, the company will be able to improve its margins as well as profitability. In fact, the management indicated that the company plans to strongly improve its operating profitability and free cash flows to get near zero net auto debt by FY24 from the current level of 48,700 crores. Currently, Tata Motors is the undisputed leader in the EV segment in India. On the back of its product performance, it has also been able to capture 94% market share in the domestic EV segment. The company sold 19,100 units of EVs in FY22 compared to 4,200 odd units in FY21. The share of EVs in total volumes has reached 7.4% in Q4 FY22 from 2% at the end of FY21. Management believes demand incentives from various states will further help EV penetration. Now let's look at the stock price. According to our SOTP valuation, the stock offers a 37% upside potential from the current market price.